We also have oil prices on the rise here this morning, big time. Bitcoin, pretty flat. Gold, just a little bit hair lower here in response to this. NASDAQ, pretty much unchanged to what it was doing here prior. So pretty interesting stuff. In just a second here, guys, what we're going to do is we're going to bring into the conversation. By the way, before I do that, check out these new little banners that we built. If you want to join our Telegram channel, it's completely free to join. You can actually scan the QR code on the screen right now. We made that so it's easier to do. I don't know if do you guys use QR codes? I feel like I've been using them more, especially if I'm watching something on like a television or if I'm watching something on like a computer and I just don't want to, scanning a QR code. I don't know. Is it easier to you guys? Try it out. Let me know. Join the Telegram if you haven't already. It is free to join. We share chart markups, ideas each and every day, fundamental analysis breakdowns. We have a research team behind the scenes that's putting up great content in there. So don't miss out on that free content. And another heads up also in the Telegram, the cool thing too, I'll also drop the link if it's easier for you guys in the live stream chat as well, if you'd prefer to just click it from the chat. But if you join the Telegram, we're also going to be doing some giveaways. We give away some copies of the Edge Finder, give away some free VIP memberships, and all sorts of good stuff. Guys, up next, well, actually, I should say, we'll bring them right in. Just say hello. Let me just switch over here the stream, and we'll say hello to the one and only Chris Pulver in the house. What's up, my friend?
Good morning, Nick.
How
Nice
you
to be
doing?
back, man. I'm doing well.
It's good to have you back on the show. It's been a little while. I was mentioning that for some of the newer stream viewers, they may not know you. A lot of the regulars will remember you, but give us the spiel. I mean, I've heard this 700 times, but who's Chris Pulver? Tell us real quick.
The quick version is been in the markets for about 25 years now, and full-time trading for about 15.
Mm-hmm.
So that's quick version. It's been a good couple of years. Hedge fund manager, worked with professionals, been a retail trader for a while. And I mean, I'm kind of underselling it, but the point is, I will do whatever it takes to figure out how to trade. So I was a hardcore currency trader for a while, managed a currency fund for about a decade, wanted to improve my risk-adjusted returns. So I thought I would turn to options. Been really grinding on options these last like 8, 9, 10 years, mainly because it all spurred from trying to protect your portfolio. Great financial crisis. I traded through that 08, 09. How do you protect your portfolio better? Sell some covered calls, buy some puts. And then it evolved into discovering income trades where you don't even have to own the underlying and you can still have defined risk. So now almost every trade that I take, you'll see this also in the Pulver alerts. Every trade has a probability attached to it, reward to risk. I know exactly most likely what I'm getting into as far as if this happens, the stock could go to infinity or go to zero, and I know what I'm risking and what my reward is. And there's not a lot of assets that offer that. Options has been a big game changer for me, and some of the best years I've had as far as minimum drawdown like 3%, 4% for 30+% gains. That's hard to achieve with defined risk. So options have been great.
So Chris, for everybody who has not had the pleasure of joining him on a stream before, again, he is super knowledgeable about just a very wide range of markets, everything from options to FX to futures, indices. So please feel free to ask questions in the chat. Chris, I want to jump right into this market environment. I feel that we have been, we've streamed together many different times and we've seen different environments, right? You've seen melt up markets. We've seen the really quick sell-off type markets that we've had a couple times in the last few years. My question to you is, and I have a guess of what you're going to say, but with stock markets at all-time highs, you have NASDAQ pushing up. We got rate cuts this week. Fed is probably going to go 25, not very likely to go 50, but most likely going to go 25. What are you doing in this environment? What are you focused on? Are you sitting on your hands? Are you raising cash? Are you long? Are you trading metals? What's got your attention right now?
Yeah, the current environment has been surprisingly melty uppy. I really am shocked that I was very aggressive this year when it came to it wasn't an easy time. And I mean, obviously I was in your office while all the craziness was happening during April. So since April, and that April, 7th bottom, shortly after, we had like I think April 21st was like the pullback bottom. And from that point, it has been straight up. And a lot of my participation, I had expirations running out to June, July, into, like first part of August. So even this August and September melt up that we've seen, I mean, September, Nick, last 10 years, and historically, September is usually the worst month in the stock market, and we're up over 3%. we're gapping higher again today. What is going to be interesting to watch today is futures gapped up right at the open at 6 p.m. and S&P futures up 1%, and SPY is only looking to gap up like 0.14%. So I'm not exactly sure where there's a disconnect there, like why exactly the futures market has such a wide gap. I hate to say this, but day to day, all I'm doing is focusing on, income trades. I mean, there's a way that even if the market goes, slightly up, slightly down, sideways for the day, there's daily income trades on the S&P. I have been enjoying the melt up. A lot of my positioning is how far out can I go? How far below April lows can I go? How passive can I be? Example, I've got one strategy that all I do is every week I basically start like 10% below the market, 15% below the market, and I put in an option trade that gets me anywhere between, 50 to $100 a setup, and I just stack those trades up like a couple times a week. So they usually run off. I take an expiration around like 60 days. And about 30 to 45 days in, I'm usually up about 80 to 90% of that profit. And this melt up has been happening where price is going higher. It's getting my trades further out of the money, which increases the probability of profit. And all it means is I'm just getting income, and I'm giving myself a lot of forgiveness. So even right now with the S&P at all-time highs, I mean, coming into this week, I am still quite shocked on the technical side that we haven't had a pullback at least to the 50-day moving average. That is, in fact, I'm in the middle of digging through like 50-day moving averages, 100-day moving averages, and 144s and 200s. I'm building out kind of like a market MRI where I want to see how extreme things get. Two levels. The 50-day moving average on the SPX should get hit, I would think, by the end of the month. And I know that seems like there's no way, that's crazy. That's like 3.5%. It is, but I also think it's something that's going to have to get hit sooner than later.
Well, Chris, let me just follow up with what you were saying, because I thought it was a good point about seasonality. So specifically, and also for the income side that you mentioned, for people who are not super familiar with options, what Chris is talking about is selling options for premium, essentially collecting credits. You can actually sell options and get paid up front. It is a whole strategy. There's ways to make money in sideways markets and all sorts of great stuff. And also, just to follow on the seasonality mention that you made about the S&P 500, this is the last 10-year average, which I like the 10-year average. I feel like if you go super far, sometimes you lose some of the modern era a little bit to it. But what we can see here is that so far, to your point, September has actually been a positive month in what is usually a negative month. It is actually historically pretty observed that September is a rough month. But to add on to that, to add some context, we can actually go to the weekly summary, and this is really interesting. On the weekly summary, what you actually see is it's specifically the back half of September.
Yeah, that's what I
the
thought.
second half is a little bit more negative. So the first half is pretty flat historically. Now, we have had a nice run up here in the first half of September. But what is interesting is we're going into this sort of everything meeting at once. I know there's like a triple witching on the options world. We also have the rate cut coming in, which believe it or not, a lot of times following rate cuts, the markets can actually make moves lower if there is signs that they are worried about the underlying economy, which I personally think, as I'm a macro guy, Chris, the jobs market really worries me in terms of the stability of the rally. It's not to say that you know very well that I typically avoid shorting markets in general. It's a really tricky trade, but my risk to reward profile on getting long indices at these levels, to me, is really difficult to justify. Like I can't really justify going out and getting super long, buying a bunch of calls or buying SPX. I just, for me, the better risk to reward is waiting for what could be. We don't know for certain, but maybe we do get that September second half reset, a little bit of a pullback here. And as you pointed out, yes, it sounds crazy for the market to pull back like that, but the thing is, when you're stretched and valuations are high and market expectations are very, very high, it does not take much to get a very quick rollover. And this price action could very quickly take place. I mean, even over here, we had a poor jobs number and the market, pretty quickly sold off. I think we could very well see that. And I would not be surprised if we did get, in the coming months, 4 to 10% pullback in the S&P 500. I think it's actually, again, I wouldn't say it's more likely per se, but I would say the risk to reward to getting long here just does not look attractive enough for me. So that's where I'm at with it. I feel that the better play is to wait for pullbacks, to be patient on it. And for me, I've been really bullish on the metals, which has been a better spot. That makes a lot more sense to me. Cooling jobs data, rate cuts, political uncertainty. I feel like the story for gold still looks really good.
Agree. And gold, to be fair, is the same type of extended setup. I mean, gold's had a great run just these last couple of weeks. End of August, we had a nice straight melt up at nearly to 3,700. I think that's where we just recently poked highs today. There's a 200-day moving average that's now stretching up close to 500 bars on the daily time frame. Again, that's a very high bar count. This isn't to call the top on gold, because I too am bullish on gold. I think that this is a buy the dip. I think gold pullback, silver pullback. Silver's actually, and I've said this now even since the last stream I was on with you guys, silver has been a better technical setup for me. And silver breaking above 40, now at 42.77, I think silver has room to run to a all-time high, which is around $49. That's where I'm trying to take it. That's still I think that's still double digits away. So yeah, we're still another 12.3% higher to get to all-time highs in silver. So any dips, any pullbacks on gold and silver, I am scooping those up. I'll probably end up adding some gold futures and silver futures to the mix on those pullbacks, in addition to SLV GLD. Bitcoin, I think Bitcoin probably has a better looking run. I don't know if we need to kind of base a little bit longer on Bitcoin. We're at 115 right now. Previous all-time highs are on 124.6. Either we just go to all-time highs and we have another squeeze. But I think gold and silver are moving really well. The dollar index. So here's what I would say as far as setting expectations this week. The Fed is going to bring, and it's not intentional, Nick, but the Fed is going to bring a lot of volatility. Yep. It's not that Jerome Powell wants to rattle the markets. It's that so much is riding on this rate cut. We have been told, and this is what the Fed gets in the markets, is they get a lot of free mileage for what they say, and then months and months down the road is what they actually do. So we've been talking about rate cuts. We've had an incredible amount of pressure from Trump and company, even Bess and some of the admins, signing off on, like, look, we need to be 150 basis points lower than we are right now and do it immediately. I listened to an interesting podcast last night that basically, with all of the fiscal dominance that is happening, where the government's spending so much money, it almost renders the Fed useless. So even with the Fed, and the reality is the Fed is unable to control the long end of the curve. And so this is what we don't know. I don't think it's going to be breaking the markets per se, but I would think that this little kind of front running yields down into 406. This is the lowest we've seen since Liberation Day, and the lowest we've seen since September 2024. After Fed cuts 100 basis points, but the market goes the opposite way, where yields go up about 117 basis points. I don't know if this is a big deal. I think that right now we have an administration that is all about fiscal dominance. I think we have an administration that wants to run the economy hot. I think we're going to have higher and stickier inflation levels. Basically, Jackson Hole's been revealed that the Fed is not looking at a 2% inflation target, but rather letting things float up into the 2 to 3% range. They probably aren't willing to let inflation run to 4%, but I'd say like 2.5 to 3.5% might be this range that is acceptable. But cutting rates slowly, 25 basis points for the next, year and a half. I don't know what that does to the bond yields. I don't know what that does to our 10-year, 20-year, but I do know what that does to our short end of the curve. That's what they can control. So short end going lower, long end probably going to stay sticky. I don't think we have a blow up bond yield market. But I actually want to ask you this: are you still in TLT, or are you out?
Yeah, so I took profits on my TLT trades. I did well on it. I did okay. But I actually have a similar, going off of what you said there at the end. The long end of the curve kind of scares me, to be honest, with a lot of not just US, markets, but internationally, I added these to my watch list, like the UK 10-year government bond yield, the
All
EU, you
going
can
up.
see
Yeah.
US. And to me, this goes back to, here's Japan 10-year, right? So you have all these yields going higher. So if the world's really buying into the idea that central banks are going to cut interest rates and inflation is going to be sustainably, coming down, these things should be making, in my opinion, bigger moves to the downside. And the fact that they're not is part of the reason why I am so unbelievably long-term bullish on metals. Because again, I think that you have this situation in which, okay, the dollar looks weak because yes, they're cutting interest rates, but the question is, on the long end, I think you have these governments that have ginormous national debts that have to print money to facilitate those national debts in an atmosphere of relatively low growth. Now, in the US, we still got growth, but look at European nations, and we could do the study if we wanted to. But long story short, I've been pulling up this chart. It's kind of cool. We can look at GDP growth forecasts. So this is US, right? So we are preliminary GDP currently sitting at 3.3%, expected to grow in the remainder of 2025. You still got some decent growth here, but what starts to look creepy is, like, look at the UK, right? So UK got 0.3% growth, 0.2, 0.3, 0.4, 0.2, like very, very small growth. And we can also look at Europe, right? So the big picture here is you just have not a lot of growth in these places. These are 0.4, 0.3, 0.2% growth on very high levels of national debt. And so if you can't outgrow your debt, what happens? Well, inflation happens because you got to print money to make that work, to keep paying back your debts. So to me, I look at a TLT, going back to your question, and I actually still see risk here. Like I
For
like
sure.
the idea of, if it gets overstretched to the downside, maybe trading the bounce back kind of thing. But I wouldn't say I'm particular. Like, if we've talked about this many times. If I had to choose, like, okay, you can't go long stocks, but you have to put it somewhere. To me, I still pick metals over bonds, because again,
Agreed.
I think that you're struggling with the national debt situation in the back end, which I think continues to keep a floor on inflation.
Yeah, and I also think that if things get worse with printing and tepid growth, basically these countries are just one, kind of crisis away from a blowout deficit. I mean, we
Yeah,
already
we're in
operate at a huge
peacetime.
deficit. It could
We're
be
in
like a blowout. It could
peacetime.
be
Yeah.
2022, UK bond market did this. In fact, when that happened, it was like September 2022 in the bond market for the UK. They were supposed to do like a balance budget reduction discussion or speech. And then all of a sudden the bond market blew out, and they completely reverted, and the Bank of England had to come to the rescue. I think that the scary part is how many trillions of dollars it would take to even see what would move the market nowadays. I mean, I don't know. I mean, it's been weird to see such fiscal dominance where it's almost, like I said, rendered the Fed a little bit more useless. Where yes, they're going to cut rates, and I think a lot of that is pressure. I think what we don't know for Wednesday with the Fed and the markets. I mean, here's S&P. I mean, my chart is just really ugly, and I'm sitting here waiting to see. Okay, we've got a 50-day moving average around 63.75. It's over 3% lower. This would be a pretty ugly way to finish the month. I mean, we're creeping up on we're past the halfway point of the month. Right. We've got 17th tomorrow, which is the Fed. That's all Fed day. We have the 30th, which is the end of the quarter, end of the month, on a Tuesday. You just showed it on Edgefinder. The back half of September is usually where things tend to weaken. I would just be shocked if by the end of this month or into October, we're not at least hitting this 50-day moving average or pulling back to these previous all-time highs. And I just want traders to buckle up for a potential 4 to 6, maybe 4 to 8, maybe 4 to 10% correction that can come fast. It'll feel like 20%, but it could be similar to what we saw last summer, July to August. I think if the market, if it's an orderly pullback, it'll feel better. But if it's just Fed day and then 2 or 3 like really ugly days in a row, it's going to feel way worse when the VIX, spikes from a suppressed 15 to like a 25 or 30. I mean, if we have another volatility type event where the VIX runs up to like 40 or 50, it's just, I don't know, man. It just sets up for such a wild couple of weeks here that we're about to deal with.
Yeah, I think so. So here's the next question for you, Chris. So
Okay.
I am looking at, to summarize kind of my view currently, I still remain pretty bearish on the dollar at this time. That's part of the reason why, I do think that metals alongside indices are a bit stretched. If we got some pullbacks across them, I'd prefer it. I also like the silver trade better than gold. I've been long silver. It's been one of my best trades this year. I'm still just riding it, trailing stops on it, trying to let that one run. Very directional trade, not options, just straight up long TLT, or I'm sorry, SLV shares. With a stop below. And then in terms of gold, same sort of story. I'd be a buyer if we got pullbacks from a trading perspective. From a long term, I think you are probably a little bit stretched on gold. And I also have talked about this before, but I think that if you actually get some sort of broader market sell-off or panic, gold will probably go down with it initially as people grab for cash. That's typically what we see across, if you see a market sell-off, you see people grab and sell their gold quickly to raise cash, and then you get the buyback, right? That's historically the pattern, is you get a liquidity freak out, and then people buy the dip on gold quicker than they buy the dip on other things. So that could be a trade, a bigger theme for maybe the end of the year, maybe next year. We'll see. But I do remain bearish the dollar, so bullish precious metals. Stocks, I again, just neutral. I can't really justify shorting. I can't justify long. I'd be interested in that dip that you mentioned if we got it 4 to 10%. And then you could probably pick your spots too. Oil prices, I'm just sort of in between. I think the weakening economy to me signals that demand for oil prices is possibly limited. So if you did get a push higher in oil prices, it's always a tricky trade because oil can pop dramatically. But I think that there could be some short selling opportunity. So that's kind of my high level actionable setups today. What are yours? If you were to just kind of line up, like, here's what I'm looking for, what are you finding?
Yeah, I've actually been dabbling. So I've had a pretty nice pump on Tesla, which I'm sure, I mean, that's a pretty
Yeah, me
actively
too.
traded thing for a lot of people, but having that rip from like 350 to 415 has been pretty nice.
I
I'm
sold
buying
the
all-time
400 calls,
highs.
Chris.
Did you? Okay.
Yep.
Well, don't feel bad because I'm selling, like 320 and 325 calls that I've been buying since the dip at 240. So
Yep.
I'm, $100+ in profit in the money. And now I'm just going to roll those calls and keep, getting whatever income I can get, a couple bucks a week or so. But I do have some ratio spreads. I do have some, some naked puts and some other things that help me make the income as this is getting further and further out of the money. But I like the run to all-time highs. I think, it looks a little, iffy, but I think it's a bull flag unless it's a run up to pull back right away to 360 again, 355. I think we just, we rip up, we base, and we're probably going to try to stretch to 480. Timing wise, I mean, if I'm doing anything on Tesla, any dips, I wouldn't mind getting some additional exposure to it. But I mean, highs at 483. We've seen mags continue to make all-time highs. I mean, look at mags. It's like it won't stop. It is wild, dude. It won't stop. This market won't stop. I think any dip, it just depends on how ugly and how violent. But it's like the retail crowd is just insatiable by the dip. I do think that most of the institutional side and portfolio managers out there are underweight equities, and I think they don't have a choice but to get into these markets. Now they are probably, strategically waiting for dips and trying to dollar cost average in. However, if you're underweight equities with the markets at all-time highs, you are getting your butt kicked out there performance-wise. So I don't think this is double down and short the market because that's insane. So what you do instead is you just wait for dips, and I think the market gives us something. But if I don't know, like I said, my bet for the next, let's say 30 to 60 days by the end of October is that we see mags pulling back to this 50-day moving average, maybe previous high around 58.79. The S&P pulling back to the 50-day moving average, maybe back to previous all-time highs. But Apple not that far away from all-time highs. Amazon not that way far away from all-time highs. AVGO is above all-time highs. Google blew through all-time highs.
Yep.
I mean, not even close. Like this, it's just that was a wild push to the upside. Meta still hasn't regained all-time highs since August. Microsoft has been finally catching a bit here around that 50-day moving average after a 13% decline from all-time highs and that earnings exhaustion. Netflix, I'd like to see some pullbacks. This isn't Mag 7, but Netflix is still a great stock. Pullback to the 200-day, I'd like. NVIDIA has been just a complete nothing burger since earnings. So I've got chart alarm set. Do we get to 184 again? Do we pull back to 162? I've got a couple expirations out to November, December on NVIDIA just to see where we go. I'm actually trading both directions. So I don't care if NVIDIA makes all-time highs or falls back to some of these fib levels. Tesla, of course, playing a big catch-up game. And I don't know if this is all because of, Musk buying $1 billion worth of Tesla stock or just it was, I thought the pattern was due. I mean, I look at this chart,
It's been
and
going
saw this
nowhere for a long
as a
time.
potential neckline, as a potential wedge, as a potential coil. And this breakout is just letting the energy go somewhere. So now we look left and find all-time highs. So
Yeah.
both
Chris,
likely be great.
on Tesla, so Tesla for me is was probably my best trade this year. I ended up buying Tesla. I bought shares back in the April sell-off. I mean, I literally got pretty close to the bottom, and I've been selling calls along the way, and I finally am going to get called away. And honestly, I'm not mad about it at all. It's not a company necessarily that I just want to park and hold forever.
You might not get called away. If
I might not get called
$400,
away.
it might have a $15 pullback, and you might be fine.
Yes, it's true. And this
Yeah.
goes out to October. So I mean, I got time. So
Oh,
it could
okay. You
either
got
keep
time. Yeah.
going or it could, but
Yeah.
either ways, yeah, the premium on those things are insane. I've done actually decently well. I pretty much sold calls the whole time. I've been getting truly into the tasty stuff. So I've been, doing the 45, selling or rolling at the 21s for the
21.
most
Yep.
part. So
Yep.
I've been pretty standard, tasty option strategy, but not the strangles, just covered calls on this.
Sure.
But anyways, I also wanted to just illustrate, because you've highlighted some stocks. I know not everybody in the audience, you may not trade stocks, but watch stocks, even if you don't trade them, because they give you an idea of market sentiment, right? If you have some of these high flying names like your Googles, like your Teslas going crazy, it tells you a little bit about market sentiment. However, we got to balance it out, because the AAII investor sentiment survey, you pointed to something, Chris, that I thought was interesting, which is you still have sideline bears. And sideline bears, the tricky part, I wish they would just go ahead and buy, because that would give me more confidence that we're actually going to see a potential pullback.
I think this is the pain trade. This is the pain trade.
This is the pain trade right here, because you still have 50% of respondents here on the AAII investor sentiment survey. This surveys a bunch of people about their perspective on the stock market going forward the next 6 months. The biggest chunk of this, people are still bearish at all-time highs. We take a look at the put to call ratio. This is always an interesting one, a little bit neutral, but you still have almost a high reading on the put side. So the thing is that what makes this tricky is you still have bearish sentiment. Take a look, for example, we could take a look, another indicator. You have the Bitcoin to gold ratio trending lower, right? Suggesting some more risk off dynamics, right? So we have this situation. And just to finish our sentiment study, here's SPX. To your point, Chris, we still have hedge funds with pretty large short positions. When the market gets when institutions get really bullish, they throw off their hedges, they just go full long. Because again, we know that they can balance their positions a little bit by buying, shorting SPX futures while also holding stocks. So that's one of the tandems with COT data history. But typically, if they're super bullish, you might see those hedges come off. Right now, we still see some pessimism in the institutional level on the SPX. NASDAQ, slightly more favored towards the long side. So just worth mentioning that. But yeah, I mean, that's the thing, is there is some room, in my opinion, to still see the stock market do a little bit of a melt up thing, because trying to time this top is so difficult. That is why I've just not been on that side of, okay, I like the idea of waiting for dips, but you may not get them, and I'm not going to try and fight if you do get that momentum to the upside.
Yeah, I'm sure along with what you're seeing every week or two, it's like I've been taking screenshots every couple of days with new high for the year, new high for the year, new high for the year, just because I'm tracking, obviously, but I haven't been super active at the tops since August. Now I've been enjoying some of the melt ups. A lot of my positions are pretty far out of the money. It's the trades I've been posting for Pulver alerts, and the way I'm positioning my portfolio is, I want to catch the market with a wide net. If we drop 5%, no problem. I'll start, taking some bites again. If we drop 10%, same thing. I think it gets a little uglier if we're double digits, for 10, 12, 15% corrections, and we don't see an immediate buy and dip. Then I think this market's potentially rolling over. But I just have a feeling that we've been in this, for the options market, it's been a positive gamma environment, which is it's suppressed volatility. And it's like every rally we're selling calls, and every dip and every correction we're buying those dips. Another thing to keep an eye on, in addition to AAII, even though it's dead wrong, I mean, the higher the bearish number, the more the pain trade is to the upside on the AAII sentiment, is looking at the NAAIM. That is an active managers summary, and that's updated also every week. We're not at a point where I would say, ooh, watch out for the active manager survey, because they might be dumping positions, or sometimes it correlates with a bit of a correction. We're not even close to that when it prints this week as well. So I think we're going to print on the 18th. It's posted every Thursday. But, the only thing I've seen as far as timing is, okay, if you look at this NAAII, we're up above 100. It coincided with a little correction. Back above 100, same thing here with a little correction. Back above 100, little correction. Right around 100, little correction. I mean, we're not close to it. So this timing wise, I'm like, I know the Fed is coming. I don't know. Price action wise, there's an infinite amount of ways that price action can play out. Sure. More than likely, I would say that we probably peak into the Fed, maybe have a big noisy Fed day, and then we see where the breakout candle sits. So if I'm going to SPX, one thing to watch as far as trading this week would be, let's say that we for the daily chart, let's say that the daily chart looks something like this: a big ridiculous candle, and then the market can't break the highs, and then it finally ends up rolling through the lows. I would just measure it, Nick. If we have a big candle like this, look at the high and then measure and see, okay, well, if it breaks lower, just measure that move for 100%. If it breaks higher, measure that move for 100%. At least from something to trade, it's like all this is melt up, melt up, melt up. But if we actually see something that kind of just rattles the market for a moment, then we see how price action plays out from there. Like I said, disconnect I see today as futures is up, nearly 1%. S&P is only gapping up about 0.14%. But I do see intraday levels showing, again, higher flows to 66.75. This puts like 6,500 on alert for a potential pullback and support level. But your guess is as good as mine, man. I know you're going to be live tomorrow for FOMC. You've got a trading battle to do tomorrow, so
it's a busy day tomorrow.
Yeah, let the fireworks kick off.
We've run out of time. We got our next show starting, but before we kick you out, and I get kicked out too. Before we do that, let me just remind everybody: if you're enjoying the show, make sure to hit the thumbs up and subscribe. You can also find Chris Pulver on his own socials. Just look up Chris Pulver on YouTube or Instagram or wherever. You can find him there. But stay tuned because this show is not over. We got Trader Tom coming up after this quick break. Before we go, like I said, if you also want to join our Telegram channel, completely free to join. We're sharing some great content, keeping you guys up to date, follow along with the show and much more. Chris, I'm excited. This is going to be a regular theme. We're going to talk markets more often. I know you got a busy day, so we'll both get out of here.
Sounds good. Thanks, Nick. See you, everybody.
All right, see you guys. Hey, stream viewers, if you're outside of the United States, I have a cool offer I want to tell you guys about thanks to our partnered broker, 8cap. 8cap is currently offering the ability for new depositors to get access to our premium tool, the Edge Finder, completely for free. Now, how this works is basically you create an account and deposit a certain amount of money into that account, and they will essentially buy the Edge Finder on your behalf. So it's a win-win-win. They get a new client for a reputable brokerage, you get access to the Edge Finder and a great brokerage to trade with, and you'll be supporting the show by signing up with 8cap. Now, here are the steps if you want to find out more about this specific offer, but make sure to follow them specifically as we list them out on the screen here. Step 1, navigate to a1trading.com/8cap. That's a1trading.com/8cap. Step 2 is to follow the instructions and to make sure you use the specific link on that screen to sign up for your new 8cap account. Step 3, complete the required deposit amounts and contact their team as instructed on the page. So if you're interested in finding out more about this offer, head over to a1trading.com/8cap, and we'll also be dropping the link to this down below in the live stream chat as we speak. Like I said, make sure to follow those instructions specifically if you'd like to get access to a free copy of the Edge Finder if you meet the deposit requirements as listed on the website. Full information, like I said, can be found a1trading.com/8cap. Now back to the stream.
Yo, traders, how are we? Trader Tom here from Simply Forex, and I'm with you for the next 30 minutes. So let's get started. Obviously, guys, not obviously, but I am a technical trader. So I'm going to look at some charts that I'm looking at from a technical perspective. But also, please feel free to leave a question. Maybe you want me to look at a couple of charts or assets that you want to analyze as well. I am going to start with the dollar index ahead of the Fed interest rate decision tomorrow. Now, obviously, the Fed interest rate could make the dollar index go buck wild crazy. That is a technical term. But ultimately, I am still bearish the US dollar, right? You've only got to look at the chart from a technical standpoint because we was in this range and we've broken it, right? We was in this range, US dollar, not much going on with it for at least, a month or so, and now we've just broken out of this range. Okay, we're getting a nice big bearish candle, and I am still bearish dollar until we reach this 96 level, right? Then we will really see if this US dollar weakness will continue. All right, there's nothing stopping price here. Yeah, I call this free air. There's literally nothing stopping the dollar from coming down into this level, right? This was the last area of potential resistance, right? Sorry, support, but it's just broke through there. So everything's telling me we are still bearish US dollar, at least for today, most of tomorrow until the Fed starts, things start going crazy. Now, bearing that in mind, I am looking at a few US dollar trades, but I need a few things to happen. We've been seeing some Canadian dollar strength. Okay, we clearly have, all right? And we've been also seeing a bit of a head and shoulders pattern here on US dollar, Canadian dollar, right? That is your quintessential head and shoulders pattern, right? You're getting a shoulder, shoulder, and a head, right? Now, for the head and shoulders pattern to become a head and shoulders pattern, you need to break the neckline, right? But I'm still liking sells back down to these lows, right? And I want to get into this pair today, but the problem with it is, right, now you can clearly see we are in a downtrend, right? Didn't break these last highs in here. And just look at the candles, super bearish, super bearish. We've been seeing a bit of Canadian dollar strength come into the market. Until we've just had some bad Canadian dollar data just a few minutes ago. But I want to sell this. If you look at the H4, I cannot trade a market like this, right? If a market just does that, I can't trade it. I don't want to trade it, right? It's impossible to get in on that trade. What I need to see is a retrace, perhaps towards the river that I have here. And then I'm looking to sell it, back down to these lows. But we just haven't seen any retrace as yet. But definitely interested in selling US dollar, Canadian dollar, US dollar weakness. And I'm also interested in buying New Zealand dollar, US dollar, right? I still think this has room to the upside. If we look at the weekly chart, right, we've broken out of this range in here, right? You can see price was tracking down and we've broken this range. So really, we've got all this room back up to these weekly highs. Nice big bullish candle breaking out of a trend line. And then if we go to the day chart as well, we can clearly see New Zealand dollar, US dollar is in this uptrend, right? Which feeds into the, US dollar weakness idea. Now, I would be looking to take some profit at this level, right? But if we break this level on the back of the Fed, then it's looking good for us to take price back up to here as well. I did actually trade this earlier on in the week. You can see here, guys, we had a nice H4 setup in here. But now, we're finding some resistance on the H4 right here. So what I want to see is a break of this level. Okay, then we can continue on with New Zealand dollar, US dollar strength. So yeah, that's what I'm looking at, guys. A bit of US dollar weakness. I'm also looking at some Canadian dollar strength, right? Because if we look at the daily chart on Euro Canadian dollar, you can clearly see we found a resistance level here, right? Price just keeps bouncing off this level. It's not breaking, right? If we go down to the H4 now with Euro Canadian dollar, we've also had a H4 structure break, right? We've broken these lows. We've had a bit of a doji in terms of a H4 candle, but I am very much interested in selling euro Canadian dollar. Now, again, we've got the Canadian dollar interest rate tomorrow as well. So, you know, when you have these news weeks, it's just tread a bit carefully, right? Let the news do what it needs to do, and then look at your setup after that, right? But yeah, I'm definitely seeing some Canadian dollar strength come into the market. Euro Canadian dollar sells I like, right? And also Canadian dollar yen buys, right? In fact, if we get a retrace down to this level, right, on the H4, I will be looking to buy Canadian dollar yen back up to these highs here, if not further. So yeah, that's generally what I'm looking at, guys. Some US dollar weakness and some Canadian dollar strength. But big bloody news tomorrow. Anyway, guys, what do you want to look at? Let's take a look at some of your questions. So lots of people want to look at the Dow Jones. So we've got Nero and we've got Mandu. I'm sure I have pronounced your names wonderfully. Okay, let's have a look at the Dow Jones. So let's do a top-down approach, right? Let's start with the weekly chart. Now, I caught the back end of what the guys were talking about earlier, and the indices just keep creating higher highs, right? And when you think it's found a bit of resistance, right, that it could react from, it breaks it, right? Then you find a bit of resistance, it breaks it, right? It just keeps going, right? And that's for all the indices, S&P, NASDAQ, right? It keeps creating higher highs and keeps breaking key resistance levels. But how long can it keep doing that, right? And again, the Dow Jones will have a big say. Sorry, not the Dow Jones. The Fed tomorrow will have a big say in what happens to these indices. But looking at the weekly chart, right, we are clearly in an uptrend, right? You don't need to be Warren Buffett to see that's in an uptrend. And we've broken this level with this candle. So it's a buy trade, okay? If we look at the day chart, right now is looking like a buy trade as well, okay? We are in a daily uptrend. In fact, let me draw that structure again, right? This is what we're looking at. We are in a bit of a range, and then we broke, right? We were thinking, is this level going to hold, right? It didn't, okay? We've got a nice bullish candle. Now, normally, when I get this combination of consolidation, right, where you have buyers, sellers, buyers, sellers, buyers, sellers, right, when you get this consolidation and then we see a break, which we clearly saw here, then normally I am very much interested in taking that buy trade, especially when we get a retrace back to what was the resistance becomes support. Now, everything is telling me to buy the Dow Jones from a technical point of view. But, yeah, you know, I'm typically in a trade for anywhere between a few hours to a couple of days. And do I want to be stuck in this trade when the Fed is speaking tomorrow? You know, that's the problem I have with this trade. But really, this is a really nice level to enter from. So weekly and daily are telling me I can buy the Dow Jones. But let's have a look at the H4, because this needs to also make sense, right? Now, what would I really want to see to buy this is a break of structure, right? You can see at this level, we've got buyers at a daily support level, of course we have, but we've got sellers at this H4 level, right? And this is where we find ourselves in another, you know, mini range, okay? So if we get a nice bullish candle break through this level, right, something like this, then I am very much interested in buying the Dow Jones, potentially back up to these highs here. I'll take some profit and then let some profit run, right? Whereas if this H4 level potentially does this and keeps breaking down, I'm not interested in buying. Yeah. Overall, you know, the Dow Jones is still bullish, but I would need to see, you know, price come down and then structure and trend build back up again. And then we start buying the market. So, yeah, very much interested in buying the Dow Jones. We do have the Fed in the back of the mind, obviously, because of tomorrow. But if we break this level, we have a nice buy trade on our hands. And why is this a nice buy trade? Because you have weekly in an uptrend, you have daily in an uptrend, and you have H4 in an uptrend, right? It's almost like the perfect storm. You've got a lot of confluence and a lot of reasons to take this trade, right? So 100% nice trade if that happens. So yeah, there you go, guys. I hope that helps with the Dow Jones. Right, what else are we looking at? Okay, we've got Euro, Aussie dollar, OT. Okay, let's have a look at Euro, Aussie dollar. We've also got Euro, New Zealand dollar. But yeah, we're seeing a bit of Euro strength come back into the market. So let's have a look at Euro, Aussie dollar. And we've had a fresh structure break on the H4, but we're in a daily downtrend, right? So let's start with the daily this time, because we are clearly in a downtrend, right? Again, you don't need to be Warren Buffett to know that this is downward trending, right? We're getting lower highs, lower. What the hell happened to my chart there, right? There you go. We're getting lower highs, lower lows, right? We're clearly in a downtrend, but you know, in here, things are just too oversold. There's no value in selling. So what I would be interested in is if price retraces back towards our river, right? Or this area here. So somewhere in here, I think we do have a nice sell trade. But there's a lot of room before we get up to those levels. Now, with that in mind, you know, could we take a trade against daily trend? And the answer is yes, right? If we get a nice big bullish daily candle like this, that clearly breaks through this resistance level, then we have nothing but free air up until this level, really, up until this 1.78 thousand. Okay, we've got some free air. Now, bearing in mind what I've just said, if we look at the H4, we have literally just had a fresh structure break on the H4, right? You can clearly see we was in this downtrend, right? We had this resistance level here, and then bang, we have broken that level, right? Now, bearing in mind we have all this free air, I really like the idea of price coming back down to what was once resistance becomes support. You can see my alarm in there. I would be interested in taking this trade, right? But I need a retrace. I'm not interested in buying here, right? There's no value. Whereas if price retraces into here, I am interested in buying and we have value. I would look to put stops pretty much all of my trades. I'm looking to put my stop below the last swing low, and then we could potentially look to take price higher. So that's how I'm looking at Euro Aussie dollar. And okay, we had a few people looking at Euro New Zealand dollar. Now, this is slightly different, right? Because with Euro New Zealand dollar, we are between a rock and a hard place. And this is a really good advertisement for looking at multiple time frames, right? Because if I showed you the weekly chart, you can clearly see the price is in an uptrend, and what was once resistance becomes good support, right? So if you were looking at the weekly chart only, why you would do that, I would never know, right? You must look at multiple time frames. Think of every trading decision as a business decision, right? And if you made any business decision, maybe some of you own businesses, right? You are going to get as much data as possible before you make a trading decision or a business decision, right? And that's how I view it, which is why I look at weekly, daily, and H4. And I'm going to show you now why that is a good idea, because on the weekly, right, we're in an uptrend, we're at a nice support level. Everything's telling us we could buy it back up to this high, right? If we only looked at the weekly chart, okay? Now, that's a buy trade. If you look at the day chart, we're in a downtrend and we're at resistance, right? We was in this uptrend and now we're in a downtrend. And what was once, so we're in a downtrend, lower highs, lower lows. And what was once support, when it breaks, becomes very good resistance in here. So I'm really interested to see what Euro New Zealand dollar does today at this level, right? If we get a nice big bearish wick, something like this, you know, could we take it down to these lows? Yes, but the problem is we're at a daily resistance level and a weekly support level, right? Which is why I said we're between a rock and a hard place, right? And what will normally happen in these situations is you find yourself in a range. Yeah, because you've got buying pressure and selling pressure. And then basically I'm looking for a break. If we break to the upside, I'm buying. If we break to the downside, I'm selling. All right, so that's Euro New Zealand dollar, guys. And guys, remember, if you like my analysis, if you want to learn how to trade technically, then please come join my channel, Simply Forex. I'm sure the guys will put a link in the live chat. We'd love to have you. Come join us. I don't buy, only at weekends. So yeah, so that's Euro New Zealand dollar, guys. What else are we looking at here? Okay, we've done US dollar pairs. So Aussie dollar, US dollar. So Jello, I've done that. Okay, let's have a look at this, because it's not something I look at. And let's just look at this with completely fresh eyes. Okay. So let's have a look at US dollar against the Swedish krona. I want to look at this because we can do a top-down approach together, right? This is a fresh chart. I do not trade this currency pair. So let me just have a quick drink of my neat vodka. And let's do a top-down approach. And let's put in some levels, right? Okay, so, I mean, we're going back, right? So first and foremost, I have to look left because there's no current support or resistance here, right? But look at this. I spoke about this earlier on. When you have consolidation followed by a break, it's normally a pretty good trade. So I've got to look left. And then I'm looking for as many touches as possible. Right, so there's a level through there. You can see that. Okay, so I'm going to put a level through here. Right, so I come away. You can see price has reacted at this level several times. Okay, so there's a support level. On the weekly, also, I'd put a level through here, and they're the only levels I'm interested in. Right, obviously there's levels here. Right, there's levels through here. but not important. Price is down here. So these are the only two levels that I'm interested in. And ultimately, right, weekly is in a downtrend. We got to some support there and then we broke it. So we're in a downtrend. I would want to sell this, but we find ourselves almost at a good support level, right? I try to look for the next big psychological level. Right, maybe this 9.2 thousand level is a nice level to aim for, right? Christ, around there somewhere. Okay, so let's put that level in, roughly there, guys. Okay, so that would be a target. A big psychological level within a support area is a pretty good target, right? So ultimately on the weekly, I want to sell. Now let's drop down to the day chart and you can see, right? Yeah, pretty good level. Doesn't need much tidying up. You can see this level was good support. We've broken it. The problem is here is things are just a little bit oversold. You know, do you really want to start selling here just to take it down to here, right? Depends on your entry time frame, but no, there's no value there for me. What I want to see is a retrace, you know, potentially to this river, to this area of what was once support becomes resistance. And then I would be interested in selling the US dollar against the Swedish krona. If price just does that, then there's nothing I can do. You know, I don't have FOMO. I couldn't get in this trade. It didn't really match my entry criteria, right? But I enter on the H4. So I want to sell this market. Let's have a look for a H4 entry. And we can see one here, right? This would be a nice entry here, right? If we got a pullback, again, I'm not interested in selling here. You know, I generally put my stops above this river, if not the last piece of resistance or support, right? So my stop loss would be up here. You know, my risk to reward just wouldn't make sense, right? So not interested in this trade. I want to sell this pair, you know, and this plays into that idea of US dollar weakness that I was talking about earlier. You've only got to look at the dollar index and there's lots of room to move into. So yeah, if we get a retrace into here, somewhere in here, then yeah, I would be interested in selling this pair back down to here. But right now it offers no value whatsoever. And all I've done, guys, is just read this chart from a price action point of view. And, you know, price action is made up of trend and structure, support and resistance, candlesticks, and this concept of value. And the problem with this trade is the lack of value. There's no value in there. Right, guys, we've got a couple more minutes. What else are we looking at? So, Elias, that one was for you. Are you from Sweden? Is that why you're checking the... Max, how are you, Max? Good to see you on here. Right, well, so let's do Aussie dollar, Canadian dollar very quickly. The problem with this trade, again, is value. Right, weekly chart. I've got a couple of minutes, guys. Right, Aussie dollar, Canadian dollar, weekly chart. Want to buy it. Clearly in an uptrend, broken a key resistance level, got nothing but free air back up to these highs. I want to buy Aussie dollar, Canadian dollar, right? If we look at the day chart, I want to buy Aussie dollar, Canadian dollar, right? But again, there's no value up here. This is the problem with a lot of these trades at the moment. They're just flying off, so there's no value. But if Aussie dollar, Canadian dollar comes back down to this level, let me just scroll out and show you that why that's a level. If we get a pullback into this level, even a deeper pullback into this level, or the river, right? And we start seeing bullish candles at one of these levels, then I'm all over it, right? There's so much value in here. Okay, I would buy Aussie dollar, Canadian dollar, but right now there's no value. And also you can see, look at these candles. It's telling you that there's some sellers in the market, right? And this is suggesting we will get this retrace. Looking at these candles, we've probably had a H4 structure break. Okay, we're teetering on the edge of a H4 structure break, right? But if we break these lows here, right, maybe tomorrow is the catalyst. We've got the Canadian dollar interest rate. We get a big bearish candle. I will be looking for something like this. So there you go, guys. Hope you've enjoyed it. Please subscribe to the channel if you have, guys. My time is up. See you again soon. Thanks for having me on. Adios, amigos.
We often get asked by our US viewers, how do you guys trade gold and indices on a regulated broker? To trade gold, indices, and more, we trade using Webull. And for US citizens watching now, for a limited time, you can get free stocks if you use our promo link that can be found in the description or dropped in the live chat right now. Webull is our top pick and personal choice when selecting a broker here in the United States for stocks, indices, and commodity trading specifically. Get your free stocks now by clicking the link and signing up using the instructions found there. Now, back to the show.
Of the stream. So let me check if I got my microphone running correctly. I think it should be okay now. So I hope everyone is doing well. What do we have this week? We mentioned we have a lot of interest rate decisions. So a lot of central bank stuff. So if we bring it up on Forex Factory, of course, if you guys have any questions or any chart requests, make sure to put it in the chat. So for Tuesday, which is today, we didn't have much, but then tomorrow we do have the Bank of Canada, we have the Fed. Thursday we have the Bank of England, and then on Friday we have tentative, meaning it's still not 100% certain, we do have the Bank of Japan. So we will see what will happen with that. In terms of the markets, the US dollar is just losing a lot of value. So the DXY is going lower. It is approaching that 96.4 level. It is definitely melting, which I personally kind of expected a bit further meltdown, but I think we're going to stop at 96.4. It would be a bit strange. I don't think the probabilities are on the side of the dollar just exploding lower with massive movement. So with this loss of value in the dollar, I did get taken out of my euro dollar buy setup. It was a winner in the end. So this was a winner. It did take me out on my IC Markets personal account. This week took me out, but then fortunately we managed to pull through on my prop firm accounts and on my DarwinX 0 account as well. So we managed to pull through. We managed to hit the take profit. So this is done. I'm out. Why did I not want to stay in this trade and keep trailing the position? Well, as I mentioned, I don't think there is a lot more room for the dollar to go lower. I think the DXY will stop at the 96.4 level, and because of that, I don't think euro dollar will explode to the upside. If we open up the Edge Finder, so let's open up the Edge Finder. Let's take a look. For the Europe economic heat map, it's not great. It's not the best. It really doesn't have a lot of, let's say, reasons. Just move the camera a bit lower. It doesn't have a lot of reasons for the euro to appreciate. So yeah, I wanted to get out. Now I'm out. If you're in this trade from the Discord signals, then great. It was a nice trade. If you guys want to join the A1 Discord, if you want to follow these trade signals and get daily market analysis and get analysis of all of the important fundamental events, then you can join by talking to a support agent. First link in the description of the stream, and you can use my discount code, which is MARKO. So make sure you take a look if you want to join, if you want to talk, if you want to send messages. This discount code also works for the Edge Finder. So I highly urge you guys to take a look, talk to a support agent or go to the A1 website. So let me check the comments. What do we have? Euro GBP, what indicator is that? Indicator. So if you are talking about this one with the lines, it is the GT recent high low. Okay, GT recent high low by Bong Hyun indicator, and you get these lines. It's really not important. It's just there to help me spot the highs and the lows, but I can do without it, to be honest. Oh, it's Marco. Yes, it is Marco. Hey, Ballout, what's up? Hey, Yoshi. Hey, Slugmeister. Gold long was nice, caught a $50 move. Nice, congratulations. EJ analysis. Okay, Elafi, what's up? Hi, Marco. Had a question yesterday, but decided to pose it today. What correlation can we expect from commodities like oil amid rate cuts? So, in my personal opinion, I'm not an expert on commodities. I haven't done the work necessary to be proficient in fundamental analysis on oil, but what I do know is rate cuts stimulate the economy. Okay, now you have a problem there because the current economy is kind of struggling. If you look at the NFP, and the US economy is, of course, the most important. So if you look at NFP, you will see that basically it is going lower. So the US economy is kind of slowing down a little bit. It is struggling. Now, rate cuts should be bullish because they should make it cheaper for companies to take out loans and to stimulate the economy and to put in more money into the circulation. So you have two opposite forces, which doesn't really give you a definite outcome for, let's say, oil or for the stock market. So generally, all goes up when the world economies are doing well, when people have extra money, when people are buying a lot of stuff, when people are spending a lot of money, when there is a lot of transport going on, when people are traveling, when there is a lot of transfer of goods going on. So that's when oil prices go up. But in this sort of an environment where NFP is in a downtrend and the US economy is clearly slowing down, and also you have rate cuts, which is bullish. This is the best sort of environment for gold and silver. So for certain, I know that gold and silver benefit, and silver has been a massive runner. Damn, it looks awesome. So gold and silver benefit the most from this sort of an environment. This environment is mixed for the stock market. It is exploding higher, but fundamentally it's mixed. It is mixed for crypto, which is stagnating, Ethereum stagnating as well, and it is mixed for US oil. In my personal opinion, again, I'm not a fundamental expert on oil, so don't take my word for it. You can do some research online, maybe ask ChatGPT about some fundamental confluences, and maybe it will be a bit of a different answer. But generally, US oil or oil prices are connected with economies. If economies are doing well, they're consuming more oil, price of oil goes up. So EJ, we talked about EJ, or there was a request for EJ. Let's check it out. And so Euro Yen. If we go to top setups, Euro Yen, just right off the bat, not my favorite currency right now. I think there's better opportunities out there. Neutral reading on the Edge Finder, definitely bullish on the daily chart in a definite uptrend. So that you cannot deny that it is in an uptrend. It is just that we have this area of resistance right there. Yeah, fundamentals are not in play for EJ. I just think there is better trades out there. Let me check AJ and NJ. AJ seems to be continuing to the upside, while EJ seems to be stuck at a resistance level. If I had to give a bias, it would be a bullish one, but in my personal opinion, there is better things out there. So the NASDAQ, I still have the same opinion for the NASDAQ. I'm looking for pullbacks. Gold and silver have just exploded without me. So unfortunately, gold and silver, I mean, I don't want to get in at these levels. I think we are overextended, but this can also continue for a very, very long time. So if I miss out on percentage, I'll miss out on percentage. It'll be fine. Again, I can only follow the plan. This time I missed the train. It was a pretty obvious train. A lot of people that I follow and respect were talking about buying gold and silver. I was late to the party, so I did not catch an entry. And now there doesn't seem to be a pullback happening. Doesn't mean a pullback won't happen, but until it does, my hands are tied according to my strategy. So euro dollar we talked about. Out of this trade, it has continued up a bit more, but we are now approaching a key level of resistance. So I think we will struggle at this level. I think we will at least reject from this level of resistance for euro dollar. Euro GBP, I can see was a request in the chat, still in this trade, but I want to get out. So for EJ, I want to get out. I don't really like this position anymore. It has been kind of range bound and flat for too long. I've been paying negative swaps, which you never want to do, or it is never fun to pay negative swaps. And also, we haven't had that quick reaction that I was looking at. Sometimes you will be early to the party. Sometimes you will take a trade idea that basically what do we want to say? Just a second, I got a message, so I got a bit distracted. So for these two positions, for Euro GBP and USD CAD, sometimes you're a bit early to the party. Now, the main idea with these trades is that the biggest fiscal sinners, so the two most problematic countries right now, is Canada and the UK. Now, they have been doing really poorly. So I'm going short on the pound. I'm going short on the CAD. But both ideas are not performing. So in the next few months, we may get a sell-off, or we may get this chart going up, and we may get this chart going up as well. It is not happening right now. For USD CAD, I'm getting paid positive swaps, so I don't mind holding this position for quite a long time. It'll be totally fine. But for Euro GBP, it's negative swaps. So yeah, basically for Euro GBP, it is negative swaps. So I don't really like this position. Okay. Will I close it now? I don't think so. I think I will wait a bit more, see if there are any developments. Again, this week we have quite a lot of central bank decisions. We have, if I'm not mistaken, we do have the UK. Yep, GP. It'll be interesting to hear what the UK central bank has to say about their economy. If you quickly run through the Edge Finder, just to refresh your memory, if you haven't been keeping up with my streams, like the pound is in major problems. GDP is all over the place. Unemployment rate, GBP, is rising. So unemployment is rising. That is pretty bad. You don't want to see that. And inflation is GBP. Rising as well, definitely above the target. It is actually pretty high, 3.8%. That's pretty significant inflation. So really problematic. That's a stagflation scenario. So it is a scenario where the pound almost certainly loses value. The question is, when will it happen? When will the big players realize shorting the pound, selling the pound is the way to go? No one knows, so you may be early to the party. Which is a bit of an issue. Okay, so let's see. I have oil is one of my 6-month, 1-year plays. It's going to be nice. Euro GBP we covered. GBP USD stronger. What about the CAD? They have inflation today. Do they have inflation? Let me see. CAD. Okay, actually, yeah, sorry, we had some CAD news. We had some CAD news where the CPI, the median CPI basically, or the CPI remained or was lower. So let's check on the Edge Finder. Let's go to inflation, CPI. Let's go to the CAD. When was the last print? Was this the last print? Yeah, this should be the last print. So inflation is kind of around the 2% target. And that is basically what is here, what is noted here, or should be noted right here. So for the CAD, I'm bearish. Really bearish on the CAD. Now, the USD weakness is kind of messing with my position. So this is underwater. But if you run through the Edge Finder, you're going to see for the CAD, the GDP is all over the place. So the GDP looks awful. Unemployment is rising. See, rising unemployment, really problematic. Inflation is, as we just covered, kind of around the 2% mark. Not a lot of room to cut interest rates. Even maybe rising if you're looking at the really short term. So the CAD, in my opinion, is still in some big problems. Also, if you look at the housing prices in the last 5 years, you're going to see this sort of a chart. Up, going lower. So in the last 2 years, the house prices in Canada have been steadily going lower. Now that is bad. It lowers the demand for the CAD. It lowers the price of the CAD. So that's another reason why I am short. So we said GBP/USD. We said GBP/USD. Let's take a look. Take a look at the daily chart. I mean, it's going up with the dollar weakness. Every single dollar pair is gaining value. Top setups. GBP/USD. Neutral reading, not the best. Not the best. I mean, to be honest, I'm short on the pound, and for the dollar, I don't see there is a lot more downside. You have also this resistance approaching on GBP/USD. If you want to buy this chart, if you want to buy this currency pair, in my opinion, it is not the best thing to do. The pound is really weak. Fundamentally, the dollar, I don't see a reason. I don't see a major catalyst why the dollar would sell off well below 96.4. Like, I know the catalyst for beginning of 25 was tariffs, new regime in the United States, Trump going crazy. That's why it sold off. So lowering exposure to the US dollar. Hedge funds were lowering their exposure. Pension funds were lowering their exposure. But what is the next big catalyst? What is the next catalyst that does this? I don't see it. And also going short on the US dollar is pretty expensive, right? So going short on the US dollar, you have to pay a lot, let's say, in swaps. So the big players that are possibly shorting the US dollar with the currently high interest rates in the United States, they're paying 4% per year, I think, and that can really mess up your bottom line. So going short on the dollar, huge amounts for a really long amount of time, for let's say 2 years, 3 years, 4 years, it can screw up your bottom line, and not the smartest thing to do if you're a big pension fund or a big hedge fund. You have to keep that in mind. It is something that the big players are heavily impacted by interest rates. Okay. So, did you just say ChatGPT? Yes, I did. I did mention it. ChatGPT for trading and investment advice. I don't see it ending well. Oh, it ends super well. Oh, just kidding. But look, ChatGPT is not a one-stop shop to give you investment or trading advice. It doesn't work that way. But for research, and it's often wrong, but for research, for learning about fundamentals, for spotting patterns, it actually works pretty well. Like I've heard a lot of good traders, a lot of professional traders actually use ChatGPT for analysis. Of course, they double check everything that is in the answer, but they do use it. Let me give you an example. There's a headline for biotech stocks, which is tradable, but you as a stock trader are not proficient in biotech stocks. So then what you can do is you can copy the headline, paste it into ChatGPT, tell ChatGPT, give me all of the headlines, all of the similar headlines in the last 5 years, and tell me how the markets reacted in those 5 cases. Well, in those cases, ChatGPT comes up with, let's say, 4 events that happened that had a similar headline, and after those 4 events, a specific stock sold off by 10% in all 4 cases. Well, now you know it is very likely that if you get a similar headline, that same stock will sell off by around 10%, 8 to 10%. And that's a trade. That's a trading edge. So you have to double check everything. It's not a perfect software. You cannot just plug and play and trade off of it, but it is great for research. And trust me, the big guys, the big players are definitely employing ChatGPT. I know it sounds silly because most people use it to, I don't know, what do you use ChatGPT for? For some stupid stuff like recommend me a movie to watch that is entertaining for me because I like this, and that. Or Photoshop my image so that I get more matches on Tinder. I've seen that happen. So you shouldn't use it for that, or maybe you should, but much better to use it for trading. US 30, maybe since US oil is a commodity, it should appreciate over time as the rate cuts are felt in the economy. Well, yes, could be the case. Your GP jump bearish mark on Edgefinder. Let me check. Let's check it out. Euro GBP. Let's see. Neutral, but pretty close to a bearish reading. I think a -5 would be considered bearish. So yeah, it switched, it flipped. Does that mean I'm going to exit my trade? No. It doesn't. Still in, still being patient, still deciding to hold this trade. If I change my mind, of course, you'll get all of the updates. You'll get all of the updates in the A1 Discord, okay? And I want to take this time to also tell you guys about today's sponsor, which is DNA Funded. So I did buy a challenge to test out ChatGPT trade signals. I know it also sounds a bit funny, but I am doing a challenge on my YouTube channel where I try out ChatGPT trade signals and how they would work on a live account. Well, I bought a challenge specifically for that on DNA. So every single day I will be inputting trades that ChatGPT gives me. And if you guys want to try out the prop firm challenge, if you want to expand your capital, you can use our discount code, which is A1 Live. Okay, so A1 Live. So if you use our discount code, you're going to get 25% off if you're coming from the live stream. So right now you can get 25% off a DNA funded challenge with A1 Live. Again, this is what the dashboard looks like. I chose the 50K account for this ChatGPT challenge, and I do have a USD yen buy right now. USD yen buy. I can show it to you. If we go to open layout, ChatGPT trades, is this one. Not working right now because the US dollar is losing a lot of value, but let's see what will happen. So, and actually for my own strategy, I'm looking at USD JPY to sell, possibly. I know the swaps are crazy high, but if we do break this level of support, I do have a lot of fundamental reasons to maybe go short, especially because the yen, Japan, could hike interest rates, which means yen goes up, right? And if the dollar keeps cutting rates while the yen keeps raising interest rates, this chart should in theory go to the downside. Now, there's been this pesky buyer, this annoying buyer at 146.1 level, and he has just been buying like crazy. So until we break that level of support, I won't be able to do much. Okay, so I won't be able to do much. That's why I do have an alert set if we do break. So Max says, are you still holding your GBP? Yes, as I mentioned, yes. USD CAD, you're holding it. Yes. So still holding 2 trades that I'm in. Still holding, if there is a green flag, I'm in the trade. Still holding Euro GBP. It's around break even. And still holding USD CAD. If it wants to take me out or stop me out, so be it. I still really like USD CAD long. I may be a bit early to the party. Okay, we have a lot of requests, but let me scroll to the bottom to see. But if they cut 50 basis points instead of 25, then we expect, can it push the dollar lower? Yes, if they are really aggressive, if the Fed wants to be really aggressive with the DXY, or with the cuts, if they want to go 50 basis points, we could break the 96.4 level and we could see it melt. Okay, so that can definitely happen. We could break that level. But I think that's not going to happen. I think we're going to get 25 basis points tomorrow. 50 is too much. It would be pretty crazy to switch from no cuts, concerns about inflation, to a 50 basis point cut in just a couple of weeks. That would be kind of crazy. Whatever happened to trade deals, nobody cares anymore. That is true. Not a single meaningful deal was made. Well, I think there was a deal with the UK and European Union, which was significant. Other than that, no deals, pretty much no other deals. And the European Union really bit the bullet on that one. They did an awful job as far as my research shows, but that's okay. You know, we love European Union, at least here in Croatia, because we get a lot of stimulus and a lot of money from European Union. But the guys in France, I don't think they like the European Union, or Germany, because they're paying for all of these smaller countries. Okay. So what did I want to say? Yeah, trade deals. It's kind of done. So trade deals are no longer in the spotlight. And you're going to notice that as a fundamental trader, narratives come and go. So you have a specific narrative. It lasts for a few weeks, for a few months, and then it's done. The big narrative in beginning of 25 was Trump going ham and tariffs. That was the narrative. Then it flipped to the Fed. Will the Fed cut interest rates? And overnight, everyone forgot about the tariffs. Everyone forgot about the trade deals. So right now, the narrative that moves the markets the most is, what the hell is the Fed doing? And that's going to be over soon. It's not going to last for a long time. So once the Fed is done, the Fed narrative is done, it's going to be a different narrative. And we as traders, we need to follow the current popular narrative and trade around it. Make trade ideas around that narrative. When you had tariffs and Trump going crazy, the narrative told you to buy gold and silver. Right? Gold, massive explosion. Then we had a NASDAQ explosion. And now again, we have gold and silver explosion because the Fed is going to do rate cuts with inflation being around 3%, which means inflation will go up even more. At least in theory, that should happen. Who's ready for Euro dollar 1.2? I am not. ChatGPT to pick up girls. Yeah, that's the best thing to use it for. Like in that South Park episode where that one guy uses ChatGPT to text his girlfriend. That's a pretty good episode. Aussie Yen, USD CAD, is it a buy? I wouldn't buy it right now, but I'm still in the trade. Hi sir, how do you incorporate artificial intelligence with your trading? Well, I just use it for research purposes. Okay, I am testing trade signals on the side, but it's just for fun. For my live trading, I basically use it only for research purposes. If I come across an article or a headline that I don't understand, I copy and paste it into Grok AI or ChatGPT, and I say, give me an explanation. How does this impact the markets? That is how I personally use it. or if I see a trade idea somewhere on Twitter or on Discord or on Substack, I just copy paste it into ChatGPT and write down, explain this trade idea. Why should I take this trade, or why shouldn't I take this trade? Aussie yen, Jovan wants to see Aussie yen. Okay, we will do Aussie yen. We are kind of running out of time, but I'll do a few more minutes. How about gold? Why is it pumping so much without any good retracement? Just the market condition, just the fundamentals right now. Rate cuts plus high inflation, that makes gold absolutely explode. Is it just an opinion, or the metric that DXY will drop when the cut already announced? USD yen. So DXY, if we get 25 basis points, I think we go a bit lower, but not much. If we get 50 basis points, this chart goes a lot lower. That's my forecast. So depends, 25 or 50. I think we're going to get 25, and I think the market reaction is not going to be that significant on the DXY. I think we're going to do this, maybe even go up a little bit. So that is what I forecast for the event. So Aussie yen, for Jovan, we can do Aussie yen. It is grinding higher pretty nicely. So I like the momentum. I like this bullish structure on the daily chart. If I check on fundamentals and the edge finder, let's take a look. Very bullish reading. That's quite good. Let's check on the Aussie. What the hell is the Aussie doing? I haven't checked it in a while. AU. Okay, it's looking okay. Coming out better than expected. Coming out more bullish than expected. That's okay. Let me run through the long-term analysis. So let's check the GDP for nice positive. Australia. Unemployment for the Aussie. It is okay, flat. And inflation, long-term numbers. Let's see the trend. Going lower. Inflation is in a downtrend. That's okay. That's pretty good. So Aussie, I would be bullish on the Aussie, both short-term and long-term. For the yen, I'm a little bit bullish on the yen as well. So I don't really like this trade idea because the yen, I think, could gain some value until the end of 25. But if you want to take a buy setup, I think it could be worth the risk. We're in a pretty nice uptrend, pretty strong uptrend on the daily. Edge Finder is very bullish on the top setups. So very bullish. And Aussie fundamentally is a very, very strong currency right now. So good idea. Not for me, but a good idea if you want to buy. And that would be about it. I know there is a couple more chart requests that I haven't covered. I am streaming tomorrow, so you can catch me and ask the questions from today on the tomorrow stream. I will be streaming for the Fed interest rate decision alongside Nick, alongside Chris Pulver. It should be pretty fun. But yeah, sorry about not going through all of the requests. We're going to do them tomorrow if you just come back and join the stream. Okay, so the last one we can do the Aussie yen. Just to quickly recap, I told you about the Aussie yen or USD yen. I'm looking to sell. Okay, I'm looking to sell if we break this level of support. If we do break it, I'm going to be looking for a sell setup. I'm worried about the swaps, but maybe a sell setup would be nice. Don't forget to check out DNA Funded. If you're interested, get yourself a challenge. Of course, if you have a proven trading edge, but you can use our discount code, which is A1Live, to get 25% off. And that is only for the people that are watching our stream. Okay, so only for the people coming from the stream. A1 Live, you can use it, 25% off. Good luck with trading. Be alert with the interest rate decisions. Be alert with the Fed. And all of the updates I'm going to give you in the A1 Discord. So thank you, Yoshi. And thank you, Jovan. And thank you, everyone else. See you tomorrow.
Thanks for watching today's show. Remember to subscribe if you're new and to turn on post notifications so you don't miss the next one. If you're looking for more free trading content, consider joining our Telegram channel, linked in the description down below, or find free courses, prop firm discounts, and broker sign-up perks on our website a1trading.com. That's all for today. We'll see you back tomorrow.